perspective on the crude fall and simultaneously what's happening in the U.S. with the fears of a shutdown and the fall that we've seen in that market. Seth Freeman joins us right now to talk about that. Seth, good morning. Thanks so much for joining in. Just a very quick perspective.
Thank you.
Crude prices coming off so rapidly. I mean, whether it's increased stockpiles or fear of slowdown, that helps India. But what happens in a scenario if we indeed go through one, this shutdown or the fears of that shutdown, and two, heightened conversations or chatter around this latest salvo from the US and the UK on China espionage?
Yes, certainly oil has really dropped abruptly, and partly because of a perceived oversupply at the moment. However, what happens is when oil drops so much, many producers go on slow speed. The cost of producing here in the U.S. is much higher. Shale production costs are relatively high, so this could ultimately lead to some pressure on supply and some prices rising in the near term.
The 1.2 million barrels per day cut that OPEC and its allies had announced just a week and a half back doesn't seem to have any impact on the prices right now. What, according to you, right now, are the fair price for Brent in the situation that we are in? Because we were trading closer to 80, 85 just, I think, 2 months back. We're already at 55 now. Is there more pain likely, or do you feel once these cuts come into play that there could be some more further upside to crude prices?
Well, it's really, I think, a temporary acute drop, partly because we're in the winter months, and normally demand should be rising. And but we're seeing WTI down to $46. The part of this is reflected perhaps in the drop in the U.S. dollar. We've got to remember oil is also priced in dollars.